Hello everyone, I'm shahidul from ULab. Now I will give you a brief description on assurance audit and internal audit. First of all, assurance. Assurance engagement is an engagement performed by practitioner to enable him to express an opinion about the measurement of subject matter against criteria. Practitioner's expression of opinion raises the confidence of the users over the measurement of subject matter subject to the criteria applicable under consideration. Now, why we need assurance? Businesses use assurance surveys to increase the transparency, relevance, and value of information they disclose to the market and their investors. Many find by sharing business performance better, it becomes a sustainable growth and competitive differentiation strategy. Providers of assurance services will help clients navigate the complexities, risks, and opportunities in their partner networks by proactively managing and monitoring risks presented by third-party relationships. And how assurance worked. The amended international framework for assurance engagement developed by the International Auditing and Assurance Standards Board IASB identifies 5 elements that all external assurance engagement share. First of all, a three-party relationship, next an agreed and appropriate subject matter, next suitable criteria, next sufficient and appropriate evidence, and the last one, a conclusion or opinion expressed in a written report. Now, where and when? Owners, management, investors, governments, regulators, and other stakeholders need to rely on the successful conduct of business activities, sound internal processes, and the production of credible information. Those operational and reporting processes enable users to make discussions and develop policies. What is an audit? Audits are retrospective independent checks on the organization's financial situation. They are often a legal requirement and are usually carried out as a part of a team at the client's premises. This report gives an opinion on the auditor's assessment of whether our account of the business financial operations complies with the required rules or standards. Next, why we need audit? We may want to demonstrate to various stakeholders such as investors, the bank, or regulators that our business correctly accounts for funds entrusted to it. Those claims are more credible when we have an audit carried out by a respected professional. In many cases, our business may be required by legislation, regulation, and contract terms to engage a chartered accountant to undertake a certain type of service. An audit helps to increase trust, benefiting both of our business and our working relationship. The next one is how audits works. The organization management prepares the financial report and directors approve the financial report. It must be prepared in accordance with legal requirements and financial reporting standards. For each major activity listed in the financial report, auditors identify and assess the risks which could have a significant impact on the financial position. Based on the risks and controls identified, auditors consider what management has done to ensure the financial report is accurate and examine supporting evidence. Auditors then make a judgment as to whether the financial report taken as a whole presents a true and fair view of the financial results. Finally, auditors prepare an audit report setting out their opinion. The next one is what auditors can't do. First of all, predict the future. The audit relates to a specific past accounting period. It does not judge what may happen in the future and so cannot provide assurance that the organization will continue in business indefinitely. Be there all the time. The audit is carried out during a definite time frame and auditors are not at the organization at the time. Next, where and when. Auditors discuss the scope of the audit work in the organization. The directors or management may request that additional procedures be performed. Auditors maintain independence from management and directors so that tests and judgments are made objectively. The next one is internal audit. What is an internal audit? Internal auditing is an independent, objective assurance and consulting activity designed to add value and improve an organization's operations. It helps an organization accomplish its objectives by bringing a systematic, disciplined approach to evaluate and improve the effectiveness of risk management, control, and governance processes. Now, what's the difference between internal and external audit? External auditors focus on the accuracy of the annual report and financial statements, whereas the internal auditor has a wide-reaching brief which considers anything which might be important to an organization's success. Next one is why we need internal audit. Besides making sure that a company is complying with laws and regulations, internal audits monitor operating results and verify the accuracy of its accounting and audit trails. They also safeguard against potential fraud, waste, or abuse and seek to identify breakdowns in internal controls. Internal audits provide management and the board of directors with valued advice suggesting improvements to current processes. Now, how they do it? Internal auditors work with management to systematically review systems and operations. Those reviews are aimed at identifying how well risks are managed, including whether the right processes are in place and whether agreed procedures are being adhered to. Audits can also identify areas where efficiencies or innovations might be made. Now, where and when? Internal audit reports are presented to the CEO and board as they provide independent viewpoint on the extent to which an organization is poised for success and advice on areas for improvement. Thank you everyone for watching this video. Hope you all liked the video and this will increase your knowledge about assurance audit and internal audit.